Preparing for a financial analyst at UnitedHealth interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Why do you want to work as a financial analyst at UnitedHealth? I want to join UnitedHealth because financial analysis here connects directly to healthcare access, affordability, and operating performance. The combination of UnitedHealthcare and Optum creates a complex environment where analysts can evaluate premiums, medical costs, pharmacy trends, provider economics, and growth investments. I enjoy turning detailed data into decisions, and I would bring strong modeling, communication, and quality control habits. This role also offers the chance to learn how disciplined finance supports better outcomes for members and customers. While answering, connect your analytical skills to healthcare impact, UnitedHealth's insurance and services businesses, interest in data-driven decisions, and the importance of accuracy, ethics, collaboration, and member-focused outcomes. Question 2. What do you know about UnitedHealth's business segments? UnitedHealth primarily operates through UnitedHealthcare and Optum. UnitedHealthcare provides health benefits across commercial, Medicare and retirement, Medicaid, and other programs. Optum includes businesses focused on care delivery, pharmacy services, and health data and technology. The segments have different revenue models, margins, capital needs, and operating drivers, so I would avoid comparing them using one metric alone. I would analyze membership, medical costs, utilization, adjusted operating income, cash flow, and strategic growth together. Make sure to cover UnitedHealthcare's health benefits operations, Optum's health services businesses, revenue and cost differences, segment reporting, diversification, and how an analyst would evaluate performance across each segment. Question 3. Walk me through the 3 financial statements. The income statement shows revenue, expenses, and profit over a period. The balance sheet presents assets, liabilities, and equity at a point in time, while the cash flow statement explains changes in cash through operating, investing, and financing activities. Net income flows into retained earnings and begins the operating cash flow calculation. As an analyst, I would reconcile earnings to cash, investigate working capital movements, and confirm that reported performance is supported by balance sheet trends. In your answer, explain the income statement, balance sheet, and cash flow statement, their relationships, accrual accounting, retained earnings, working capital, and why analysts reconcile profit with cash generation. Question 4. How would you forecast UnitedHealth's revenue? I would build revenue from operational drivers rather than simply applying a historical growth rate. For UnitedHealthcare, I would forecast membership by product, premium or revenue per member, pricing actions, government rate updates, and expected retention. For Optum, I would use service volumes, client activity, pharmacy trends, and contractual pricing. I would incorporate seasonality, acquisitions, and management guidance, then create base, upside, and downside cases to show how enrollment or pricing changes affect results. Be sure to mention membership, premiums or revenue per member, Medicare and Medicaid enrollment, Optum transaction volume, rate changes, seasonality, acquisitions, management guidance, and sensitivity analysis around key assumptions. Question 5. What is the medical care ratio, and why is it important? The medical care ratio measures medical costs as a percentage of premium revenue. It is a critical profitability indicator because it shows how much premium revenue is being consumed by member care before administrative expenses. I would analyze it by product and period, separating utilization, claim severity, provider pricing, mix, and premium rate changes. A declining ratio can support margin expansion, but I would not view it mechanically. Appropriate care, access, and long-term outcomes also matter. Focus on medical costs divided by premium revenue, interpretation by business line, utilization and severity drivers, pricing adequacy, policy changes, seasonality, and the trade-off between lower costs and member care quality. Question 6. How would you analyze a medical cost trend that is higher than expected? First, I would validate the data, timing, and comparison against the approved forecast. Then I would decompose the variance into membership mix, utilization, severity, provider pricing, pharmacy costs, and claim completion. I would examine whether the increase is concentrated in a product, geography, procedure, or population, and compare current emergence with historical patterns. After identifying the driver, I would update the forecast, quantify the financial impact, and communicate both the cause and potential management actions. In your answer, discuss validating data, separating volume from price and severity, identifying product and geographic concentrations, examining claims development, checking assumptions, and recommending operational or forecasting responses. Question 7. What are incurred but not reported claims, and how would you evaluate them? IBNR represents claims relating to services already provided but not yet reported or fully processed. Because payment data is incomplete, finance and actuarial teams estimate the ultimate liability using historical payment lags, completion factors, utilization patterns, seasonality, and recent claim experience. I would compare current estimates with prior periods, analyze reserve development, and test sensitivities around emerging trends. Accurate IBNR is essential because underestimation overstates current earnings, while overestimation delays recognition. Make sure to explain IBNR, incurred versus paid claims, actuarial estimation, completion factors, lag patterns, seasonality, reserve development, and the importance of sensitivity analysis and cross-functional review. Question 8. How do you build a monthly financial forecast? I start by loading validated actuals and reconciling them to the general ledger and prior forecast. Next, I update driver-based assumptions such as membership, revenue per member, medical trend, staffing, pharmacy activity, and other operating expenses. I meet with business partners to understand known changes, quantify risks, and separate timing items from structural trends. Finally, I compare the forecast with budget and guidance, run sensitivities, document assumptions, and communicate the key movements clearly. While answering, cover historical actuals, operational drivers, assumptions, run rate analysis, variance explanations, stakeholder inputs, scenario modeling, review controls, and clear communication of risks and forecast changes. Question 9. Tell me about a time you found an error in financial data. In a prior internship, I noticed that a monthly expense report showed an unusually large favorable variance compared with the operational activity. I traced the difference to a file that omitted several invoices during a data refresh. I confirmed the issue against the source system, informed my supervisor, corrected the report, and documented the reconciliation. I then added a completeness check comparing invoice counts and totals across periods. The experience reinforced that skepticism and repeatable controls are essential. Be sure to describe the situation, control or analytical check that identified the issue, root cause investigation, correction, stakeholder communication, and preventive action without blaming colleagues. Question 10. How would you evaluate an investment or acquisition opportunity? I would assess the opportunity from both strategic and financial perspectives. I would understand the target's revenue model, customer or member base, margins, cash generation, growth assumptions, and operational risks. Then I would model purchase price, financing, integration costs, synergies, taxes, and the timing of benefits. I would evaluate valuation, NPV, IRR, payback, and downside cases, while considering healthcare regulation and execution risk. A compelling transaction needs sustainable economics, not just optimistic synergy assumptions. Focus on strategic fit, revenue and cost synergies, standalone economics, forecast quality, valuation, cash flow, integration costs, regulatory considerations, sensitivity analysis, and return metrics such as NPV and IRR. Question 11. What is working capital, and how would it affect cash flow at a healthcare company? Working capital reflects short-term operating assets and liabilities that influence cash conversion. At a healthcare company, relevant items can include receivables, premiums due, claims liabilities, provider payments, pharmacy-related balances, and other payables. An increase in receivables may reduce cash even when revenue is recognized, while higher claims liabilities can temporarily support operating cash before payments occur. I would analyze changes by business driver and distinguish normal timing from emerging collection, payment, or reserve issues. In your answer, define operating current assets and liabilities, explain receivables, claims liabilities, payables, premium timing, provider payments, and why cash conversion can differ materially from reported earnings. Question 12. How would you explain a variance between actual and budgeted operating income? I would build a bridge from budget to actual operating income, separating revenue, medical costs, operating expenses, investment effects, and timing items. Within each category, I would quantify volume, price, mix, utilization, rate, and productivity impacts. For example, stronger membership may increase revenue but also raise medical costs. I would distinguish controllable from external drivers, validate explanations with business owners, and present the largest causes, their persistence, and the outlook rather than simply reporting a percentage variance. Make sure to discuss revenue, medical costs, operating expenses, membership, mix, timing, price volume effects, controllable versus uncontrollable items, bridge analysis, and concise communication of corrective actions. Question 13. What financial metrics would you monitor at UnitedHealth? I would monitor revenue and membership growth, premium yield, medical care ratio, operating cost ratio, adjusted operating income, operating cash flow, and free cash flow. I would also track medical trend, pharmacy utilization, risk adjustment effects, provider economics, and capital or debt metrics. The right dashboard depends on the segment. Optum may require service volumes and client activity, while UnitedHealthcare needs enrollment, pricing, and claims indicators. I would focus on trends, drivers, and forecast implications rather than isolated results. While answering, include revenue growth, membership, medical care ratio, operating cost ratio, adjusted operating income, cash flow, medical trend, risk adjustment, capital strength, and segment-specific productivity measures. Question 14. How does Medicare Advantage affect financial analysis? Medicare Advantage analysis requires linking enrollment, premium revenue, risk adjustment, benchmark rates, quality performance, and medical utilization. Revenue per member can vary significantly with member acuity and coding, while costs depend on care patterns, provider contracts, pharmacy use, and supplemental benefits. I would monitor regulatory updates and star rating implications because they can affect future economics. I would also analyze trends on a per-member basis and separate membership growth from changes in underlying profitability. Be sure to mention enrollment, premiums, risk adjustment, benchmark rates, quality ratings, medical utilization, supplemental benefits, regulatory changes, and the importance of analyzing revenue and costs per member. Question 15. How would you use Excel to analyze a large financial dataset? I would first define the question and understand the source fields before manipulating the data. I use structured tables, pivot tables, SUMIFs, XLOOKUP, conditional checks, and reconciliation totals to analyze large datasets efficiently. I separate raw data, calculations, assumptions, and outputs, and avoid hardcoding wherever possible. I would test unusual values, tie totals back to the source, document the logic, and have important outputs reviewed. Excel should make analysis faster without weakening control discipline. Focus on data cleaning, structured tables, formulas, pivot tables, lookups, reconciliations, exception checks, scenario analysis, documentation, and avoiding errors through independent review and controlled inputs. Question 16. Describe a time you had to present complex analysis to a non-finance audience. I once presented a budget variance analysis to an operations team that did not work with financial terminology regularly. Rather than lead with accounting classifications, I explained the operational drivers using a simple bridge and 2 charts. I highlighted what changed, why it changed, and what action was available. I paused for questions and confirmed the team agreed with the underlying activity data. The result was a more accurate forecast and stronger collaboration between finance and operations. In your answer, explain how you simplified the message, selected relevant visuals, connected financial results to operational drivers, anticipated questions, and verified that the audience understood the recommended action. Question 17. How would you assess the impact of a change in provider reimbursement rates? I would identify the affected contracts, services, markets, and effective dates, then estimate the reimbursement change against expected utilization. I would model direct medical cost impact, potential changes in provider behavior, referral patterns, access, and member outcomes. I would also check whether the change affects quality incentives or other contractual payments. Finally, I would compare the impact across products, run sensitivity cases, update the medical trend assumption, and explain both the near-term margin effect and longer-term strategic implications. Make sure to cover affected services, utilization, contract timing, revenue or medical cost classification, member and provider behavior, sensitivity analysis, margin impact, and differences across markets or products. Question 18. What would you do if a senior stakeholder challenged your analysis? I would remain open and ask the stakeholder to identify the assumption or result they believe is incorrect. I would retrace the model, verify source data, and distinguish factual errors from different judgments about future conditions. If the analysis needed correction, I would make it promptly and explain the change. If the disagreement remained, I would present the evidence, sensitivities, and alternative cases neutrally, involve the appropriate reviewer, and preserve a clear audit trail. Be sure to mention listening carefully, separating facts from assumptions, retracing calculations, validating source data, remaining respectful, incorporating legitimate feedback, and escalating unresolved issues through evidence-based communication. Question 19. How do you prioritize multiple urgent requests from different teams? I prioritize requests by deadline, business impact, regulatory or reporting risk, dependencies, and effort required. I clarify the decision each analysis supports and negotiate scope when necessary. For example, a close related issue or executive forecast question may take priority over a routine dashboard enhancement. I communicate timing early, provide an interim answer when useful, and track commitments. Even under pressure, I protect accuracy through reconciliations and review rather than treating speed as a substitute for quality. While answering, discuss business impact, deadlines, dependencies, regulatory or reporting risk, effort required, transparent communication, expectation setting, and maintaining accuracy instead of rushing every request equally. Question 20. Tell me about a time you demonstrated integrity in financial analysis. In one reporting cycle, I noticed that an assumption used in a forecast was not supported by the latest operational data. The assumption produced a more favorable result, but I did not ignore the discrepancy. I raised it with my manager, showed the source evidence, and prepared an alternative scenario using updated information. We revised the forecast and documented the rationale. That experience taught me that credibility comes from transparent analysis, especially when the conclusion is uncomfortable. In your answer, emphasize accurate reporting, willingness to challenge unsupported assumptions, confidentiality, escalation of concerns, documentation, and choosing transparency even when the result may be inconvenient. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.